Yes, people, a very happy morning to all of you. So, guys, we're going to begin with a brand new topic today, which is average due date. So, in the last class, we have completed our discussion on bills of exchange. And today we are heading forward to another unit, unit 4, called as average due date, which is a part of your chapter 6, accounting for special transaction. So, guys, this is a very short and a sweet topic, very easy topic. And from the examination point of view, it's very, very important because in all the attempt, except one attempt, in all the attempt, we had a question of at least 5 marks from this topic. Only in one particular attempt from this question, they did not ask, from this chapter, they did not ask a direct practical question. Rather, they asked a true and false related question. So let's have a look at the PEP, past examination paper analysis of average due date chapter. So guys, May 2018, in May 2018, question 2B, they've asked it for 5 marks. It's a unilateral transaction related question. So what is unilateral transaction? What is bilateral transaction? All that we'll understand when we do the topic. So you will get a rough idea here that from the examination point of view, from this particular topic, how many times this question has been asked for what marks. Similarly, November 18, guys, average due date question had come as a part of your question number 6C, which was again for 5 marks. May 19, question 3C, bilateral transaction related question, 5 marks. November 19, question 3C, unilateral transaction, 5 marks. December 20 was again for 5 marks. Jan 21, 5 marks. July 21, 5 marks. December 21, 5 marks. June 22, question 1, compulsory question. So in June 21, guys, you got a average due date question as a compulsory question, which was part of your A3. This was true and false. Sorry, compulsory question, but this was true and false. December 22, unilateral transaction, 5 marks, question 3B. And June 23 exam is yet to happen. So in next couple of weeks, we'll get to know whether in the examination this question is being asked or not from this chapter. So moving forward, guys, what is average due date? So let me take a practical situation to give you an understanding of what is the meaning of average due date. So here this is Mr. A, who was the seller. Who is the seller? And he is a wholesaler. He is a wholesaler. Yes, all of you understand what is a wholesale business, retail business, and manufacturing business? Okay. So he's a wholesaler. What is he doing? He is selling goods. He is selling goods to Mr. B. Mr. B. B is a buyer, customer. Customer for whom? For Mr. A. And this guy is running a retail shop. So he's a retailer. So all of you know what does a retailer do? Retailer will buy goods from wholesaler so that he can sell it to his end customer. Wholesaler will buy from whom? Manufacturer. Okay. Now it is very obvious, guys, when a retailer buys from wholesaler or when a wholesaler tries to buy from a manufacturer, they don't buy in small quantity. They buy in large quantity. Only when an end user is buying, end user will buy based on what his capacity is, depending on what requirement he is having. He'll buy in small quantities. Whereas retailer will always try to buy in bulk, because when you buy sometimes in bulk, you get the discount. So to have a price benefit, people normally buy in bulk. So what happens is that obviously when a person is buying a huge quantity, the value involved, the transaction value involved will naturally be high. So for a person to make a spot payment for the entire transaction value could be very difficult. So normally, guys, the wholesaler has the tendency to sell the goods on credit to the buyer. So he will give certain credit period. And sometimes it so happens that this credit period, what has been allowed, they would pay in multiple installments. For example, Mr. A has sold goods to Mr. B, say for 75,000 rupees. For 75,000 rupees. Now this 75,000 worth of goods is being sold on credit for a credit period of 3 months. Wherein Mr. B is supposed to make the payment, 2 options. At the end of the 3rd month. At the end of the 3rd month, he has to make full 75,000 payment. So again, problem is what? Making a lump sum payment becomes little difficult for the retailer. So what retailer might insist is that, sir, give me 3 months credit in a way that I make this payment in installment, which means what? 1st month end, I'll make 25,000 payment. Second month end, I'll make another 25,000 payment. Third month end, I'll make another 25,000 payment. So he's getting a total 3 months of credit period, but he has to make this payment in 3 installments, beginning immediately from the next month onwards. So here the credit period that is agreed is 3 months with 3 equal installment. 3 installment, which means each installment is for how much money? 25,000 rupees money. Okay, so today is what? Today is 6 June 2023, which means June 2023. This is the transaction date when the goods has been purchased or when the goods has been sold. So please tell me 1 month later means which date? 6 July 2023. Can I say this is the date on which we'll make the first installment? Yes or no? This is the date on which we have to make the first installment. How much money? 25,000 rupees we have to pay. Second installment will fall due on which date? Sir, 6th August 2023. So this is my second installment. This is the second installment where again we'll pay how much? 25,000 rupees. And the last installment is happening on 6th of September 2023, which being the third and final installment for an amount of 25,000 rupees. Online people, are you able to follow what I'm discussing?
Yes, sir.
Now imagine a situation where Mr. A is selling the goods to buyer, not one time a month. He's doing transaction with B multiple times a month. For example, this is one transaction, 3 payments. Yes, this is one transaction. First transaction, 3 installments. After 2 weeks, there is a second transaction. There is a second transaction. Again, 3 installments. After 1 month, third transaction, which means what? After third month, B is coming in buying again from whom? The seller A. So he's doing the transaction third time with A. Again, 3 installments. After 1 week, again, fourth transactions. Again, 3 installment. Totally, how many installments? 12 times he has to make the payment. 12 times B has to make the payment within a span of 2 months. The transaction happened. Within a span of 2 months, the transaction has happened. And within agreed period, he has to make the payment 12 times. See, sometimes what happens is that 12 transactions, it is fine. Still, you can remember. Imagine a business scenario where these transactions keeps on continuing throughout the year, where the transactions is probably 20, 30 transactions. Each transaction, 3 installments. So how many installment? 30 transaction to 3 installment means 90 installments. Imagine a person has to remember Mr. A. Imagine the plight of A. He has to remember collecting the money from Mr. B 90 different instances on 90 different dates. So this is not a problem only for A. It is also a problem for B to remember to make the payment on 90 different dates. If he misses out the date, he has to pay what? Interest for delayed payment. So don't you think that when they started initially, it was all good that, okay, we'll make payment in installments, different date, we'll get some time gap in between so that we can arrange for finances, everything is fine. But practically, guys, when the transactions are large in number, it becomes very difficult for one to keep a track. So when this keeps on continuing, guys, at one point of time, both A and B will get annoyed that so many days we have to remember this much money has to come from so much people. Imagine A is not selling goods only to B. A is also selling goods to multiple other party. That is also on credit. That is also an installment. So A has to remember from how many people. So here what happened is, this is an exceptional case where A was frustrated. B was also frustrated. So both of them agreed that we'll do one thing. See, we want a credit period, no doubt. The 75,000 rupees, what we have agreed, let's have this credit period, but in a way that this entire 75,000 rupees is paid in one shot. In one shot, in such a way that neither Mr. A is gaining anything by way of interest, nor Mr. B is getting anything by way of interest. I'm repeating one more time. Mr. A and Mr. B are transacting between themselves n number of times during the year, because of which there are multiple payments that is agreed upon on different dates. At one point of time, both seller and buyer are annoyed to remember so many transactions to be paid. So both of them are coming together and discussing their problem, and they're telling that let's do one thing. Let's agree a one date. Let's agree a one particular date upon which the entire 75,000 is paid. We will pay entire 75,000 rupees in one shot in such a way that there is neither gain of interest to A, neither there is a gain of interest to B. Neither there is a loss of interest to A, neither there is a loss of interest to B. Now, your question will be, sir, two things. You will have two questions. Sir, if 75,000 payment is supposed to be made on one particular day as a full lump sum, then why did they first of all agree on installment? You will have that doubt. Second doubt you will have is that, sir, what do you mean that on a particular day, if you make the payment, it should result neither gain or loss to each of the parties? What do you mean by that? So I have to give explanation of two things. You had these two doubts. No? The first doubt is what? Sir, if 75,000 is supposed to be given as a lump sum one payment, then why did he go for credit period? Why did he go for installments? First question in your mind, it will pop up. Second question, what will pop up in your mind is that, sir, you are telling that on that day we have to make the payment, wherein neither A is losing anything, nor B is losing anything. Nor A is gaining anything, nor B is gaining anything. So what gaining are you talking about? Now listen to me very carefully. So we are telling that, sir, we want to agree a date on which the entire 75,000 is made as a payment in one shot. So now if you ask the seller, you tell me a date on which you want 75,000 to be received in one shot as a lump sum payment. If you go and ask seller, out of these three dates, which date will the seller prefer to receive the money full 75,000 in one shot? Tell me, people. If you are a seller and if I come and ask you, out of these three options, 6/7, 6/8 and 6/9, which day do you prefer to collect full 75,000 in one single shot of payment? Then what would you say?
6/7.
6/7. Okay, others? 6/7. Why 6/7? Early payment. The person who is receiving the money, he wants to receive the money at the earliest, boss. So if you ask the seller, what will he say? Earlier the better it is. Correct, no? If you ask Mr. A that which point of time or which date you want to receive the money, obviously he will say the earliest date. Because the earlier he gets the money, he can deploy that money somewhere and earn some additional income. So obviously he would want the money to come in advance. Now, if you ask Mr. B, when do you want to pay the money, the entire 75,000 in one shot? On which date do you want to pay the 75,000 rupees on one shot? What will be answer?
The last September.
We will answer 6/9, because for the person who is making the payment, he wants to make the payment at the last, so that the 75,000 rupees, what he's got the money, no, he will enjoy that money for those 3 months nicely. At the end, after fully utilizing that money, he will pay this money to whom? The seller. So for buyer, always it is later the better it is. Later the better it is. So now tell me, guys, both of them have given two different dates. Both are totally opposite to each other. Now tell me, if I go with Mr. A, don't you think Mr. B will be upset? If I go with Mr. B, don't you think Mr. A will be upset? So what do you mean by upset? Please explain. Okay. Now, let's go as per Mr. A. As per Mr. A, if I receive the payment on 6/7/23, how much money I'm receiving? Full 75,000 I'm receiving. Now, please understand this. When the transaction of buy and sell was executed, both of them agreed that if this money is received and paid on this date, I'm okay. If the money is received and paid on this date, I'm okay. If the money is received and paid on this date, I'm okay. Which means seller is okay to receive 25,000 on this date. So when seller knows that on 6th July, I'm going to receive 25,000. On 6th August, I'm going to receive 25,000. On 6th of September, I'm going to receive so much of amount. When he knows that, accordingly, he would have made his plan in his business. Which means if seller has to make the payment to the manufacturer, he would have told manufacturer, please wait. On 6th of July, I received 25,000 rupees. So that day I'll make you some payment. On 6th of August, I'll receive some money. That day I'll make you some payment. Like that, seller would have made arrangements. Yes or no? Similarly, buyer also would have made arrangements to arrange for the funds on 3 different dates. So which means what? Both of them have agreed. Both of them have agreed for these 3 dates. Now, when 75,000 rupees, guys, the money is coming in advance. 75,000 rupees money is coming in advance. In that, can I say 25,000 anyways, it is the due date. I have to receive the money. That is, if 75,000 rupees is paid on 6th of July, in that 25,000 anyways, it was agreed already. But can I say 50,000 rupees is the money? Actually, 50,000 is the money that is received in advance. That is, on 6th of July, if seller receives money, on 6th of July, if seller receives money, 75,000 is receiving money. In that, anyways, 25,000 was already contracted to be received on that date. So can I say seller on that date is receiving a surplus money of how much? 50,000 rupees is the surplus money. Guys, am I right or wrong? Online people, please tell me.
Yes, sir.
Now, this surplus money, guys, can I say if seller is having 50,000 in his hand, what he will do? He will not keep the money idle. He will invest this 50,000 rupees somewhere to earn some return. Let's suppose the return is 1% per month. Let's say the return that seller is going to earn is 1% per month. So can I say the 50,000 rupees what he is earning surplus? He will deposit that somewhere in fixed deposit or bank. How much rupees? 50,000 rupees. So why 50? Because out of the 75,000 rupees, 25,000 rupees he has to pay to whom? Manufacturer, other party. Because that is what is agreed. So how much is the extra money that is available with the seller? 50,000 rupees. So that extra money, what he'll do? Because it is coming as a surprise, no? See, this 50,000 what seller is receiving, it is not planned in advance. Earlier, what was planned? 25,000 I'll receive and I'll give to the manufacturer. That was what planned. Out of nowhere, seller is receiving additional 50,000 rupees. So he don't know what to do. So he'll not keep that money idle. If he is a prudent businessman, nobody will keep the money idle. So he will invest this 50,000 rupees in the fixed deposit. Let's assume at the rate of how much? At the rate of 1% per month. So what is the interest what is earning? What is the interest what is earning? 1% of 5 to 50,000 is 500 rupees is the additional income. Who is earning? Seller is earning. Can I say the same 500, if seller is earning, the buyer is losing? Why? Because had you not made the entire 75,000 payment, had the buyer not made the entire 75,000 payment, had he made only 25,000 payment, how much extra money would the buyer have? Buyer is now paid 75. Imagine he's not paying 75. As per the contract, he's paying only 25. Let's assume. Then how much money is having surplus in hand? 50,000 rupees. So then buyer, what will he do? He will invest somewhere. So he would have earned that 500 rupees. Now, just because he gave that 50,000 rupees in advance to seller, he lost the opportunity of earning that interest. He lost the opportunity of earning the interest, which means, can I say, if early payment is happening, Mr. A is the gainer of interest. If early payment is happening, Mr. A is the gainer of interest. Mr. A is the gainer of interest. And can I say Mr. B is the loser of interest? Mr. B is loser of interest. Guys, if the early payment is happening, Mr. A is receiving money in advance. Extra money is receiving in advance. So that extra money he'll invest in the bank and he will earn the interest. Whereas Mr. B, since he is making 50,000 rupees advance payment, which is against the contract, so he loses the opportunity of investing in the fixed deposit and therefore he will lose the interest on that 50,000 rupees. Am I right or wrong? Now tell me if anybody's got any issues. Mohit, facial expression thoda alag tha. Understandable? Okay. Offline? Guys, if you don't get this concept, no, you will not understand average due date. If you really want to understand the essence of average due date, whatever I'm explaining, if you understand the core of it, no, this topic is so smooth. See, this concept, whatever I'm explaining, without explaining, still I can make you do the average due date. You will know how to do the question, but you will not know why this question has been done in this way. So the entire reason of me explaining this is to put that concept in your mind that, first of all, why average due date concept we are learning? What is the significance or benefit of that? So that is why this concept is important. So online people, are you able to understand that If A is receiving 50,000 early, then what A is agreed? See, A is agreed to receive this only 25,000 here, another 25,000 next month, another 25,000 next month. But to his surprise, he is receiving the entire 75,000 in advance itself. In that 25,000 is nothing but on the due date as contracted he is receiving. How much extra is receiving on that day? The balance 50,000 rupees. So this 50,000 rupees, obviously the seller will not keep the money idle. He will invest that money in the fixed deposit so that he can earn interest. So he's gaining by way of interest. He's gaining by way of interest. Same opportunity, guys. Mr. B is losing since he's making the advance payment of 50,000 here. He is not having any surplus money left. So he's been deprived of the opportunity of earning the interest. So in this case, if the early payment is made, Mr. A is the gainer of interest. Mr. A is gaining by way of interest, and Mr. B is losing by way of interest. Tell me yes or no. All in people.
So when you say interest, is it the interest that the bank provides?
Obviously, no.
Interest. Okay.
Interest means wherever you invest this 50,000 rupees and whatever return you earn, that return I'm referring it to as interest.
Okay, like that. Okay.
Let's suppose you're investing this 50,000 in the share market or mutual funds. The dividend is the return. So here Mr. A is gaining by way of dividend. Mr. B is losing the opportunity of earning that dividend because he gave that money to Mr. A. So is this concept clear or not clear? Alvin, Navya, Srinidhi, Varsha, online.
Yes,
Clear.
sir.
Offline people, all of you clear? Okay. Now, guys, in case we don't go with what seller is expecting, we go with what buyer is expecting. Buyer is saying later the better, which means what? Mr. B is saying that no, I will not make the payment here, which means 25,000 also I'll not make the payment here. I'll not make any payment here. I'll make full 75,000 payment here. I'll make full 75,000 payment here because we are agreeing a date on which the entire 75,000 payment is done in one shot. Correct? No, we are agreeing on that date on which the entire payment is made in one shot, so that we don't have to, remember that on what date what amount should be paid. So we are, eliminated from that hassle of remembering. So now, guys, what happens is 75,000 rupees payment has been received here. In that, can I say this 25,000 is received as per the contract only? This 25,000 is not a surprise element. Surprise element is what? The 50,000 rupees, which B is paying very, very late. Actually, he's supposed to pay 25,000 here, but he's not paying. So it got accumulated. Another 25,000 is supposed to pay here. That also is not paying. So that 25,000 also got accumulated. So 75,000 what he's paying, actually 25,000 only as per the contract he has paid, which is the third installment. Whereas his first two installment, he did not pay as per the contract. He accumulated and made a total payment. Now, when this happens, guys, tell me, this 25,000 Mr. B did not pay to Mr. A on the first installment. So he would have kept the 25,000 in his pocket. And this 25,000 Mr. B, what you would have done? You would have invested somewhere. So how he invested for how many months? Let me put this 500 on the top. You would have invested this 25,000 here for 1 month. 25,000 at the rate of 1% per annum. So how much interest? 250. Correct, no? Then second installment he did not pay here. So this 25,000 also is accumulated. So the first 25,000 is invested again at the rate of 1%. Second 25,000 also is invested at the rate of 1% per month. So here is making an interest of 500. Here is making the interest of 500. So in the first month he is making 250 rupees interest, and second month he is making 500 rupees interest. He is earning extra interest. Now, can I say that had you made this 25,000 rupees payment to the seller, now as per the contract, had the buyer made this 25,000 payment to the seller, so seller would have received the 25,000 rupees. And let's imagine that 25,000 seller is not giving to the manufacturer. Wholesaler is not paying to the manufacturer. Instead, the wholesaler is keeping the 25,000 with him itself. I'm telling about the situation that as per the contract, had A received this 25,000 rupees, and let's suppose he is not giving this money to the manufacturer, can I say that surplus money he would have invested in the fixed deposit? So if he invests that 25,000 in fixed deposit, how much interest will he earn? Same 250. So can I say if the payment is made as per contract, A would have got this 250 rupees. And if you don't make the payment as per contract, which means you make the entire payment at the end, Can I say B is the person who's enjoying this 250 now? So in the case where Mr. B is making the payment at the later stage, it is Mr. B who is gaining by way of interest. Tell me yes or no. Mr. B is gainer of interest. How is he gaining interest? Since he's not making those first two installments, he is investing that money somewhere and is making money out of it. And since that first two installments are not going to A, he's not having any money. So he cannot deposit that money. He cannot earn any interest. So he's losing interest. So when the payment is made at the later date, it is advantageous for whom? It is advantage for Mr. B, disadvantage to Mr. A. So here, Mr. A is loser of interest. So now guys, these two extreme dates, if you go, that is if you make the payment on 6th of July or 6th of September, one person is losing, another person is gaining. Another person is gaining, first person is losing. So this is continuously happening. Now guys, 75,000 rupees, we want to agree to be made as a payment on one single day. For what purpose? So that we can comfort each other. Guys, this date, what you're agreeing to pay, should be a due date on which the credit period, what you agreed is satisfied. The credit period has to be satisfied. Guys, Mr. A sold goods to Mr. B for 3 months credit period. When both of them are agreeing to make a payment on a particular date, it doesn't mean that we are violating this credit period. We want to satisfy this credit period. So the first question what you had was that, sir, if 75,000 had to be paid in first installment, then why did they agree credit period? So when I'm agreeing on average due date, guys, I'm not violating the credit period. Average due date is that due date where you agree a intermediary point, a center point, where you make the entire 75,000 payment, where neither the person is losing any interest, nor the person is gaining any interest. So let's understand this. Is all of you clear with one point that if the payment is made on 6th of July, A is gaining, B is losing. If the payment is made on 6th of September, B is gaining, A is losing. So definitely these two dates, we will not choose to make the payment of 75,000 rupees as lump sum because it is biased. One person is gaining, another person is losing. Now we have to agree a in between date where you make the payment in such a way that neither A is gaining anything nor B is gaining anything. Neither A is losing anything nor B is losing anything. So arriving at the center date, guys, arriving at the center date on which the payment is made is called as a average due date. So average due date is that date on which the entire 75,000 rupees is paid as one single amount in a way that neither A gains anything by way of interest nor B gains anything by way of interest. Neither A loses anything by way of interest nor B loses anything by way of interest. So average due date is that date where you make the payment in a way that the credit period, whatever is agreed, the credit period, whatever is originally agreed, that credit period is satisfied in such a way that neither this fellow is gaining anything nor this fellow is gaining anything. So that day is called average due date. Normally the average due date, when you calculate, it will come as a center point, which means what? Certain payment you have to make here. Certain payment you have to make here. So we'll neither make the payment here, not make the payment here. We'll make the payment in the center stage. So in the center stage, the person is making the payment. In the center stage, the person is receiving the payment. So both of them have the opportunity to invest here, and gain interest. So neither one is losing nor other is gaining. So if at all losing, both are losing. If at all gaining, both are gaining. So for example, once again, I'll just complete this. So if you make 75,000 payment here, who is gaining? Early payment means A is the gainer, B is loser. If 75,000 payment is happening, B is gainer, A is loser. In the intermediate stage where the payment is made, which means what? This payment is not happening here, which means here Mr. A is supposed to receive money. He is not receiving any money. He is supposed to receive 25,000 here. He is supposed to receive 25,000 here. He is supposed to receive 25,000 here. So what is happening? He is not receiving the payment here. Instead, he is receiving the payment here. He is supposed to receive 25,000 later. but 125,000 is receiving earlier. Total 75,000 payment he has to receive. 25,000 rupees in the center point is receiving, which means what? Center point means which date? 6th August. Guys, in this question, if you calculate the average due date, 6th August will turn out to be the average due. So it comes as a center point. So on 26th of August, if the payment is made, 75,000 payment is made. In that, anyways, 25,000 payment is agreed as per the contract. So can I say A was supposed to receive 25,000 in the beginning, which he is not receiving. So he's receiving 125,000 late. Another 25,000 which is supposed to receive late, he is receiving it earlier. So one early payment, one late payment. In one, he will gain interest. In other, he will lose interest. So plus 250 minus 250. So net impact is what? 0. Same way for B. Think from B's point of view. B is supposed to make 125,000 payment here, but he's making that 25,000 payment here. B is supposed to make 125,000 payment later, but he's making 125,000 payment earlier. This is plus, this is minus. This is late payment, this is early payment. Another 25,000 is paying as per the contract in the middle of the month. So that middle 25,000, no problem. The problem is with the first 25,000. The first 25,000 rupees, B is supposed to pay here. He is paying in the center point, which means, can I say, is delaying the payment by 1 month? The first 25,000 is delaying by 1 month. Third 25,000, he's supposed to make the payment here, but he's making 1 month earlier payment. So plus and minus. So on this, if he earns interest, on this, if he loses interest, 250, 250. So plus 250 minus 250, the net impact is what? 0. So average due date is that center point of payment where neither of the parties are gaining anything by way of interest nor losing anything by way of interest. Problem will happen when, if the payment is made early here or late here, then one is losing, another is gaining. Then there will be a conflict. Today they'll be okay, but tomorrow there'll be a fighting. So to avoid the fighting, we are agreeing on a between date to ensure that whatever was originally contracted, whatever the originally contracted benefit, or whatever the benefit was agreed in the original contract, that benefit should be retained. What is the benefit in the original contract? They agreed a credit period of 3 months. So that should be satisfied in such a way that there is no gain of interest or loss of interest to the either parties. So here, when we are agreeing on average due date, guys, it is only one thing, that the payment which is going in multiple parts is going as one lump sum. Otherwise, the credit period, what is agreed, and as per the credit period, whatever the benefit and losses is agreed, that is honored, and we are not deviating from that. So that date is called as average due date. Are you able to understand the feeling? Online people, hello?
Yes, sir.
Yes, sir.
Fantastic. Now let's go to the theory and understand. What is average due date? Yes, your doubt, Kana.
I have 2 points.
Yes.
So if A has to gain, why will he give credit transaction and wait till 9:23 to get the amount? If he really wants to gain, he can do cash transaction itself. So then the 75,000 will come on the same day.
Okay.
And the second point is, why would we calculate average due date? We can keep the due date itself as 6/8/23. So automatically we'll get 75,000.
Okay, one by one. First question Dinesh is asking is, sir, the 75,000 rupees, what Mr. A is given as credit, no? So when he wanted the payment in one shot, and when he wanted to benefit the 75,000 as early payment, then why would he give the credit period? Instead, you would have done a cash sale on the 6th of June itself, and you would have got this money, and you would have invested this money elsewhere and made the money. Now here, 2 things you have to remember. See, Mr. A is in a business model where he has to give the goods on credit because he's a wholesaler. And wholesaler, that's the starting point I said. Wholesaler, when they give the goods to the retailer, they always give in the bulk quantity, which comes with a huge value. See, now here it is 75,000 rupees. You might feel 75,000 is chiller amount. But imagine this is not 75,000, instead it is 7.5 lakh rupees. Then 7.5 lakh rupees for a retailer to pay in one shot, don't you think it is a painful thing? And if wholesaler does not offer a credit period, nobody will come and buy from the wholesaler. So wholesaler ought to give the credit. So whenever wholesaler is giving the credit, the benefit is to whom? Retailer. And that benefit is agreed in the contract, and they are okay with this benefit. Which means what? Buyer is saying that if you make the 25,000 payment here, I'm okay. So this 25,000 rupees, what seller is receiving, he will invest this money somewhere and earn interest on this 25,000 rupees. Now the buyer will have additional 50,000 rupees now. So imagine a situation. This is 6th of June. This is 6th of June on which the transaction has happened. On 6th of July, 25,000 rupees who is paying? Buyer is paying to the seller. So can I say this 25,000 seller will invest in fixed deposit and earn some interest? How much interest he will earn? He will invest this for 1 month. So he'll earn 250 rupees. And on the same day, the buyer is paying 25,000 rupees. How much money is not paying? 50,000 is not paying. So buyer will put an FD of 50,000 rupees and he will earn how much interest? 500 rupees. So imagine if everything is gone as per the contract, which means what? On 6th of July, A is receiving 25,000, which means B is paying 25,000, which means B is not paying the remaining 50,000. Obviously, B will invest that and earn how much? 500 rupees interest on the 50,000 rupees. So this is originally agreed, no boss. So this benefit of A and B is agreed. Now, when you're agreeing on average due date, it should happen in a way that this benefit which is going to the seller and this benefit which is going to the buyer should not get violated. Which means what? When you make the payment on average due date, the benefit what is already agreed, that benefit has to be gone to the buyer and seller. If you make the payment on the earlier date, if you make the payment on the early date, if you make the entire 50,000 payment on earlier date, can I say now here, A is earning how much? He'll earn 750. That is 250 as per the normal contract. He'll earn 500 rupees extra. And this guy will be deprived of that 500 rupees earning. So can I say you're deviating from the contract? Because if early payment is made, if full 75,000 is made the payment here. So A will have how much surplus money? 50,000 is surplus money. That 50,000 rupees, if he's investing in the fixed deposit, how much interest is earning? 500. Total, how much money is investing? 75,000 is investing. So his interest is how much? 750. In that, 250 is the interest as per the original contract. Because of the change in the date, he's earning extra how much money? 500 money. No, this we are not okay. Originally, A said that I'll earn only 250 out of this benefit. As originally, I'll get benefit of 250. I'm okay with that. So because of early payment, apart from this 250, now A will end up getting extra 500 also. Which means what? B is losing this 500. This should not happen. As per the contract, originally what was agreed? Originally it was agreed that A will benefit so much, B will benefit so much. So you have to ensure that when the average due date is agreed for payment, that date when the payment is made, this benefit should pass on as it is, as per the original contract. But it should not be a case where the benefit is shifted. The momentum should not be shifted to either party. So when you're making a payment on a date, the momentum should not completely get shifted to B, or the momentum should not get completely shifted to A. So therefore, we are agreeing as intermediary center point where whatever you have agreed earlier, the same benefit is gone. This should not be deviated. That is the reason the person is not making the entire payment in the beginning itself. Because in this business, if you make the payment in beginning, or if you insist the money in the beginning, nobody will come and buy. So Mr. A will never be able to do a great business. So this was your first question answer. Second question, please.
If they're calculating average due date, that average due date itself can be the due date.
See, the average due date what we're calculating, sir, why didn't they originally agree on that due date? That's what your question is. Why are we agreeing it now? See, now here, there are 3 payment installment. You're like, fine. Imagine 30 payment is happening, 30 installment is happening, 90 installment is happening. When the first installment or first transaction was taking place, did both of them imagine that in future the relationship will be so nice that they will do 90 transactions? No, right? So as the business progressed, so first time A did transaction B, they agreed 3 installment properly paid. Then second transaction, then immediately after the third transaction. Like that, after a point of time, the transactions kept on increasing. The installment kept on increasing. So as they traveled together, they realized that there's a huge headache. I have to receive so much money from this fellow. And this fellow says that I have to pay so much money to this fellow. How will I remember? So when there is a problem arising, no, problem means what? The problem of remembering to pay, the problem of remembering to collect. When that problem is triggering, that time only you'll think about average due. Now then you will agree. Now this problem has to be solved, boss. You have to agree on a date where you make the entire payment in such a way that neither this party is gaining nor that party is gaining. So average due date is a concept that comes into picture when the problem of multiple payment arises. Here I took only three payment. So you're not feeling that difficulty. Imagine this is 90 transactions. If I do 90 transaction here, you'll get confused. And for me also, it will be very difficult to explain. So that's why for convenience sake, I took 3 installment. But in 3 installment cases, this problem will not happen. This problem will happen in multiple installment cases, where it is very difficult to remember how much to pay, to whom not to pay, when you have so much of difficulty. Now, this is a unilateral transaction. Unilateral transaction means what? A is selling goods to B, B is only buying. Now, bilateral will come. A will sell goods to B, B will sell goods to A. He has to receive the payment, he has to give the payment. So, bilateral transaction means what? A will sell goods to B, B also will sell goods to A. So, both of them are buying and selling from each other. Now, imagine that is another complicated case. So, when the business transaction gets complicated with regard to receipt and payment, and when they find it difficult to make the payment on respective agreed due dates, so we agree a common due date called as average due date. Average means what? Center point. Guys, now tell me one thing. When I do average of 2 things, if I do average of 2 things, let's say 100 plus 90. If I want to do an average of this, what will I do? Divide by 2. So what is that? 100 plus 90 by 2 is how much? 95. Can I say 100 plus 90 is how much? This total is 190. Can I say 95 is in between of this 190? So average means what? Center point. So average due date means what? We want that due date which is falling in center. See, this is throughout the year, multiple payments you have to make. These are multiple due dates. We don't want to make the payment on multiple due dates. We want to make the payment on the center due date. That is called as average. Average means what? Average is to get the center point. So we are agreeing on the average, that is center point of the due date. So all the due dates what you have, of all the due dates what you have, we want to have a center due date. So that on that, if I make the payment, neither A is gaining anything nor B is gaining anything. Neither A is losing anything nor B is losing anything. So average due date is the center date. So have I answered your second query, Kanu? You had a question, Sai.
Instead of making average today, let them like if it's making earlier payment days, we might give a discount rate. So
Okay, now what Sai Singh is telling that, sir, what is the problem? If A wants early payment, okay, and since A is receiving the early payment, he's gaining that interest, he can pass on that rebate to the Mr. B. Okay, but for that A and B both have to agree for that now. If they're agreeing that okay, rebate is given or rebate is allowed or given, something is agreed between them, it's fine. What if that for that rebate also they're not coming together? There's a complete clash. That is no rebate giving, no rebate taking. We'll agree on that due date where we make the payment so that we don't have to calculate the rebate at all. Then what will you do? Then you have to do the average due date. Now here also guys, average due date, once you calculate, there are questions where if you make the payment earlier than the average due date or later than the average due date, you have to calculate interest. So that concept I'll tell you when I come to those questions. So now we'll keep it very simple, guys. We'll keep it very simple. What is average due date? When payment or receipt from a particular person are due on different dates. When there are multiple due dates, there are multiple due dates of payment and receipt. You calculate an average due date. An average due date is determined in order to simplify the payment process. When there are multiple payment or receipt is supposed to happen on multiple dates, it becomes very difficult for us to remember. So to make our life easy, we agree a particular intermediary date. We agree a center point date on which the payment is happening in such a way that we don't have any issues or difficulty. Or when a person owes several amounts to another person, who is owing several amount here? Can I say B? Mr. B is owing several amount to another person. Who is another person? A, which is falling due on different dates. So it was falling due on 3 different dates in our example. And he wishes to make a payment. He means what? B. B is wishing to make the payment on just one particular date. Why is he wishing so? Because he is very tired of remembering multiple dates. He doesn't have the mindset to remember so many dates. He says that, no, I am tired of making or remembering so much of multiple dates. You tell me one date on which I have to make payment. But that date should neither benefit you nor it should benefit me. It should be neutral to both of us. So when a person owes several amount to another person falling due on different dates, and he wishes to make the payment on just one particular date, so that neither the payer is who? B, nor the payee, who is A, stands to lose or gain by way of interest. So neither B is gaining anything nor A is gaining anything. Neither A is losing anything nor B is losing anything. So such date on which you make the payment is called as average due date. I'll be sharing this document to all of you. In other words, average due date is that date where multiple payments are settled in lump sum. Where multiple payment. So how much multiple payment we had? 25,000 to 3. 3 multiple payments are settled in lump sum. Lump sum means how much? 75,000 on a single date, without losing interest of the either party, which means on that single date when you make the payment, neither A should gain anything nor B should gain anything. Neither A should lose any interest nor B should lose any interest. So on that, when you make the payment, on that date when you make the payment, that date is called as average due date. So average due date is the weighted average due date of the various transactions, with amounts of each transaction is used as a weight. Now this I'll explain when I do a practical question. If this is clear, can we do a practical question to understand how we arrive at that date? Hello, online people.
Yes, sir.
Sir, too much of theory done, sir. Practical question, start, sir. Okay. So the very first illustration of your ICAI study module, is it there in the book? The first question. It says that the following are the amounts due on different date between the same party. The following are the amounts due on different date between the same party. 500 is the amount to be paid on 3rd of July. The due date for payment is 3rd of July. 800 to be paid on 2nd of August. 1000 is to be paid on 11th of September. So 3 different payment dates. Now they are telling that suggest a date on which all these bill is paid in one shot in such a way that there is no loss of interest to the either party. So which means they ask us to calculate what? Average due date. Now before I go forward, let me explain you how many types of questions you'll come across. There are total 4 cases that we have to learn. The first case that we're going to learn today is that learn how to calculate average due date when one party is involved. One party is involved means what? A is selling goods to B, which means A is seller, B is buyer. This is called as unilateral transaction. Unilateral transaction. Next case we learn is learn how to calculate the average due date where inter-transaction between two parties are involved, which means what? A is selling goods to B. So A is the seller, B is the customer. Again, B is selling goods to A, which means A and B are dealing with multiple items. They are dealing with multiple items. So A is selling one particular item to B. B is selling another particular item to A. Same goods are not transacted. Same goods, why will they buy and sell? This is an example where A and B are dealing with multiple products. So B likes one particular product from A, so he buys it from A. A likes one particular product from B, he buys it from B. That way both are buying and selling from each other, which means A has to make sometime payment to B and B has to make sometime payment to A. So this is called as bilateral transaction. So most of the questions have come from case 1 and case 2 in the examination so far. That's what you've seen now. Unilateral, unilateral, bilateral, unilateral, bilateral, bilateral. This is a third example. In July 21, unilateral transaction of loan repayment, what they asked is basically another scenario. Case 3. Learn the calculation of average due date where the amount is repaid in installment. This is case 3. From case 3, only once the question has been asked. And case 4, so far, there is no question that has been asked. From case 4, so far, there is no question being asked. So 1, 2, 3 is the important question, but that doesn't mean that 4th question will leave it. ICAI is like, you judge me, I'll prove you wrong. So this attempt, you expect that case 4 will not come and it will come. So you have to do all the cases, but high weightage is given to case 1, case 2, and case 3. Now let's go back to our question. Please take a fresh page. Heading, please. Calculation of average due date. This should be the heading. Taking dash as base date. What is a dash? I'll tell you. You have to put a tabular column, people. First column is due date. First column is due date. Second column is amount column. Amount in rupees. First column is due date column. Second column is amount in rupees. Third column is Number of days from base date. Number of days from base date. Last column is product column. Last column is product column. Last column is product column. See, these are the 4 columns you have to prepare. So due date, guys, is given in the question 3rd July, 2nd August. 3rd July, 2nd August, and 11th September. 11th September. Amount is very clearly given in the question 500, 800, and 1000. 500, 800, 1000. Now listen to me very carefully. Please till this you finish it, then I'll tell you what to be done. Please make a correction here. Number of days from base date to due date. Number of days from base date to due date. DD stands for due date. Number of days from base date to due date. Now guys, the due date column which is there, no? From that due date column, you are supposed to pick one date which is the least or the smaller date. Guys, I'm repeating one more time. From the due date column, there are 3 dates. Out of these 3 dates, you have to pick and choose one date which is least and the lesser number of days. Which is the least date? Online people, hello? Which is the least date? Guys, are you all there online? Varsha, Alvin, Navya, Shriti?
Yes, sir.
Yes.
Okay, so the least date what you pick and choose is the base date. So taking 3rd July as base date. So now guys, you have to calculate the number of days. You are supposed to calculate the number of days from base date to due date. So what is the base date? 3rd July. 3rd July is the base date. From base date to this due date, how many days? 3rd July to 3rd July, due date is 0. When number of days is 0. Now guys, number of days from base date 3rd July to 2nd of August. How many days you have to calculate? How to do it? Very simple. Guys, we are in the base date 3rd July. Okay. In July totally how many months?
31 days.
31. Sorry. How many days? 31 days. Sorry. 31 days. In that, if 3 days of July is gone, because the base date is 3rd July, we are on 3rd July. If 3rd July is gone, if 3 days of July is gone, how many days of July is remaining?
28.
28 days of July. So when you add 3rd July plus 28 days, you will land up to which date? 31st of July. Now we have to travel where? 2nd August. So how many more days we have to travel forward? We have to travel 2 more days forward. So 2 more days. So we'll go to 2nd August. So totally how many days you travel forward? 28 plus 2, 30 days. So number of days from 3rd July to 2nd August. If I travel forward, so that means number of days is 30 days. Is it matching the textbook?
So just one doubt.
Yes,
Every
boss.
time the first date will be the base date, is it?
Yeah, because you have traveled from base date to due date. No, from base date to each and every transaction's due date.
Okay. So if it was August, September, and October, August would become the base date.
Now, if you take, let's suppose 2nd August as a base date, guys. So 2nd August is the base date. So from 2nd August to 3rd July means you have to travel in reverse. If you travel in reverse, the days will become negative. See.
It's not compulsory that you have to take July as the base date always.
I'm coming. No, it is not compulsory. You can take any date. But
I
why
got
I'm
it.
taking the least date is because so that you get the number of days positive. I'll explain to this. So this
Okay.
is 3rd of July. August, which date?
2nd.
2nd August. 2nd August. And September is 11th September. These are the 3 due dates. Now, out of these 3 dates, you are taking 3rd July as the base date. Okay. Which means what? 3rd July to 3rd July, 0. Then if you go forward, 3rd July, that is base date is 3rd July. So 3rd July to 3rd July is 0. 3rd July to 2nd August, 3rd July to 11th September, you're getting answers in positive. When you travel forward, the number of days will be positive. Now imagine, had you not taken 3rd July as the base date, had you taken 2nd August as a base date, still answer, you will get same answer only. But the problem is when the base date is become 2nd August. So now 2nd August to July, which means you have to travel backward. So when you travel backward, the answer will not be positive. The number of days will be negative. Since to avoid the negative calculation, we tell you to take the due date, which is coming the least one, so that the answers are positive. Otherwise, even if you take 11th September also, boss, you'll get the answer. Average due date, you'll get it. But the calculation will become negative also. So negative calculation is complicated. To avoid the negative complications, we're telling that take that date, which is the least date. Otherwise, you take any date I'm telling you, you will get the average due date. If you want to try, yes, homework can try. Varsha, have I answered your query?
Yes, sir.
Now, guys, third one, number of days from base date to due date. So base date is what? 3rd of July. 3rd of July is the base date. So from this base date, you have to travel to 11th of September. So how will you travel forward? July totally 31 days. 31 days of July means we are in 3rd of July. So 3 days of July is gone. So 31 minus 3 is how much? 28. Which means what? 28 days we have to travel forward. 28 days we have to travel forward. With 3rd of July, if you add 28 days, you land up where? 31st of August. Then if you add 31 days of August, if you are at 31 days, you will land up to 31st day of August, correct? We want to reach 11th of September. So if I add further 11 days of September, I'll reach to 11th September. Now listen to me very carefully. 3rd July. With 3rd July, you added 28 days so that you could land up to 31st July. With 31st July, when you add 31 days, you will land on the 31st day of August. On 31st day of August, if you add 11 days, you will land up to 11th of September. So how many days forward you traveled? 28 plus 31 plus 11. Total how much? 70. Total is 70. So we have to arrive at the number of days from the base date to due date. Then what am I supposed to do? Do the product. Product means what? You multiply the amount and number of days so that you get the product. So all of you, please take your calculator.
So 1 minute. This
One second,
August
one second. Let me complete this. One second.
Okay.
So in your calculator, 500 into 0 is what? 0. Then take your calculator. 800 into 30 m plus 24,000. 1,000 into 70 m plus 70,000, you'll get it. Then do MRC. You'll get the total of 94,000. Any problem? This trick we have already learned in the bills of exchange. How to use the calculator functions. Anybody's got any difficulties? Anyone? Gokul? Having a calculator? Why? Okay. Next class? Done. Guys, 94,000 is the total product. You have to do the total of the amount. Total amount is how much? 2,300 is the total amount. So we have to have total amount and we have to have the total product. Now, formula for average due date. Average due date is equal to base date plus total product divided by total amount. Average due date formula is base date plus total product divided by total amount. So what is the base date? 3rd July. Only people, what is the base date? 3rd July. Plus, what is the total product? 94,000 divided by 2,300. So 3rd July plus 94,000 divided by 2,300. What will you do? You're getting 40.869. Yes, do you know the concept of round off, round up, and round down? There are three concepts. Round up, round off, round down. Round up means what? Whenever they say you to round up something, it means what? If you're getting 4.1 up to 4.4, round up means what? You have to round upper value. Upper value is what? 5. 4.1 means what? Upper value is 5. After 4.1, the upper value next value is not 4, it's 5. 4.5 to 4.99, it is always 5. Round up means what? You have to round up to the next number. Now, whenever they say round off, 4.1 to 4.4, it will be always 4. Round off means what? Up to 0.4, it will be 4. From 4.5 to 4.99, it will be 5. From 4.5 onwards, you will round up. So whenever it is round off, some 4.5 and onwards, you will round up to the next number. Up to 4.44, you will treat it as 4.44 only. Round down means what? 4.1 to 4.44, it is 4. 4.5 to 4.99, still it is 4. Which means if it is round down and if the starting point is 4, whatever be the decimal, it will be 4 only. In case of round up, 4.1 or whether it is 4.99, round up means always next number. Round off only I have to remember. So if I have to tell you, in other words, 4.1 to 4.99, it is 5 always. 4.1 to 4.99, round down always means round down. So 4.1 to down is what? 4. 4.1 down, below that what is it? 4. Round off only you have to remember. Round off means what? Up to 0.4, it is the base 4 value only. If it is 4.99, it is 5. Now tell me something. Or let's say the base round, okay, number is 5.6. What will you do? Round off. So it is 6. 5.5, 6. 5.2, 5. So are you clear with round up, round off, and round down, online people? Hello?
Yes, sir.
Now, in your average due date, whenever you get in decimal, you will round off. So 40.8 means 41. Perfect. So 3rd July plus 41 days. 3rd July plus 41 days. Now, please understand, guys, what did we do is basically this amount is there, no? Amount is multiplied with the days. See, if I take average of the amount, if I take the average of amount like 500 plus 800 plus 1000, that is 2300 divided by 3, I'll get the average amount. I don't want average amount, I want the average date. So what do we do? With the due date, I cannot get the average. Can you get the average of these dates? If I tell you 3rd July, 2nd August, 11th August, you get average date. So can you add these 3 and do divide by 3? So what are we doing? This due date first we are converting into days. We're first converting into days. So now we are multiplying this. So we're getting a product. So this 94,000, when I divide by this 200, so 94,000 rupees is the total payment product wise. If I divide by this 2,300, I will get how many more days I need to add to the base date so that I can arrive at the center date. Amount into number of days, you're getting a product. So this 94,000 is a product. Product means what? It is a multiplication of number of days and amount. So that when you divide by 2,300, you will get number of days. So which means what? With base date, you need to add this much number of days. From 3rd July, you will add some extra days, 41 days, so that you will land somewhere in the center point. You land somewhere in the center point. And on that date, when you make the payment, neither this party is gaining anything, nor that party is gaining anything. Neither this party is losing anything, nor that party is losing anything. So now please tell me, guys, with 3rd July, if I add 41 days, what date will I land up to? Very simple. Sir, we are in July month. July, how many days? 31 days of July. Days of July. Now, in that, we are on which date as of now? 3rd July. So 3 days of July already gone. So 3 days of July already gone. So how many days of July left? 28 days of July. 31 days of July. In the 3 days is gone. So 28 days. So which means with 3rd of July, if I travel 28 days forward, I'll land up to which date? 31st of July. So how many more days I have to travel? We can do one more way of doing calculation also. Wait.
30 days for August, no?
41 days is there. We are on 3rd of July. So in 3rd of July, how many days yet to expire?
20.
So July has got total 31 days. In that 3 days is already expired. So balance is 28 days. So if I minus 28 days of July, what is the balance? 30? 30, 1 3. I'll be left with 1 3 days of balance. So 13 days, when you minus 28 days, from 41 days, if you minus 21 days, you will land up on which date? 31st of July. From that, if you go 13 days further, will land up to 13th of August. So minus 13 days of August, if I do, I'll land up to a 0 date. Which means what? 13th of August is the due date. 30th of August is the due date. Is it correct?
Sir, it's 11th August.
Sorry?
Oh, no, I'm confused now.
13th of August is the due date, which means from 3rd of July, you have to travel 41 days forward. So in this 41 days, guys, in this 41 days, total I have to travel forward. So in that 28 days of travel, I'll do in July. So total 41 days I have to travel forward. In that 28 days, I'm traveling in July itself. So balance, how many days left? 13 days balance is left. So in that 13 days, if I further travel, where will I land up to? 13th of August. I land up to 13th of August. So guys, 13th of August is that date when you make the payment. Neither this guy is gaining anything, nor that guy is gaining anything. So it's an intermediary date. It's an intermediary date. What happened? Coming to that. So guys, what is the first date? 3rd July. What is the second payment date? 2nd August. 2nd August. Third payment? 11th September. Now please understand, here there is a gap of 1 month. Can I say here there is a gap of more than 1 month? So can I say if I make the payment on 2nd August, will it be right? No, because it is not the exact center point. That is not the exact center point. The example what we took in the beginning, guys, the 6th August is the average due date because the interval is correctly 1 month and 1 month. So if you take an average correctly, 6th August would have been the due date. But here, if you observe very carefully, here the interval is probably less than 1 month. Less than 1 month. Here it is more than 1 month. So I cannot take the 2nd August as the average due date, which means when you calculate the average due date, you will come somewhere in the center point, which is 13th of August. So 13th of August is center point, which means what? From this period to this period, there is an equal interval. And from this period to this period, there is an equal interval. Taking into consideration the different amount. Taking into consideration the different amount. In our example, 25,000 was constant. Here the amount is varying. So the amount that is varying, that also to be taken into consideration, and the days also to be taken into consideration. Therefore, this will be that center point on which you make the payment. So neither of the parties will gain anything by way of interest, nor they will lose anything by way of interest. So this is the average due date, which is the center point. Now the question what Disha was asking is that, sir, what will happen if the average due date is coming on 15th of August? So we'll apply the simple rule. If the due date is falling on a public holiday, the previous day will be the payment day. If let's suppose the due date what is falling, it is on the unplanned holiday. From nowhere, there's a sudden holiday coming up. Then the due date will be the next day. So the principle what we learned in the bills of exchange topic, no, the same principle will apply. Now tell me if you have any problem. Online people, hello.
So how did you arrive at this 41 days part? My internet.
Very simple. Total product divided by total amount is equal to 40.869. 40.869. If you round off, it becomes 41 days.
Oh, so you just okay. So this is the standard formula.
Yes.
Okay.
We have to round off, guys. Please make a note. We have to round off. In the document, I have mentioned it here. The result of the fraction, that is in the average due date, the result of the fraction should be rounded off. So in the formula, guys, base date is the due date of the first transaction. So we have taken base date, no? What is base date? Base date is the due date of the first transaction. Can I say here, in this question, can I say this was the first transaction? So base date is nothing but the due date of the first transaction. The due date, sorry, where base date is the due date of first transaction or the due date of any transaction. Actually, you can take any date, but we always will take what? We'll take the first transaction only. Here they're telling that the base date can be any due date of any transaction. It could be even first transaction, it could be any transaction. But for all practical questions, we'll take the first transaction as base date, because if you take in between date as a due date, the answer, the number of days what you'll calculate will go in negative. If you don't want the calculation to go in negative, we'll take the first date as the base date. So all of you understand, if I take, let's suppose I'm taking 2nd of August as a base date. Do you realize that from base date, if I calculate this due date, the answer will be negative? Because from 2nd of August, you have to travel reverse. Traveling forward is positive, means traveling reverse will be negative now. So that's why we are not taking the old date. We're taking the earliest top date. Preferably, the due date of the first transaction is considered to avoid the negative calculation. Preferably, the due date of first transaction is considered to avoid negative calculations. I'll give the sheet to all of you. Now tell me, any problem, people? Hello?
No, sir.
No, sir.
Can we do second question? Now this part, what they've explained here, I will take a practical question, explain this. Let's not focus on this. We'll do a practical question to explain. One more question, then break. Guys, one question and then break. Last question and break. For what? You call, no? Second one. The following amount are due 2x by y. So who will pay money to whom?
Y will pay to X.
Following amounts are due 2x. Due 2x by whom? By, which means y has to make payment to x. So y wants to pay off on 18th March or on 14th March. Interest at the rate of 8% per annum is taken into consideration. See, in this type of question, first you have to calculate the average due date. So one average due date will come. Now compare that average due date and the actual date of payment. What is this 18th March? Y wants to pay on 18th March. So you have to compare the average due date and the date of payment and check whether there is early payment or late payment. If there is any early payment or late payment, the interest calculation will come into picture. So let's do this question, guys. Very simple. They've given the due dates. They've given the amount. Determine the amount to be paid in option A and option B. So forget that, guys. First, let's calculate average due date. First, let's calculate average due date. So heading will be what? Calculation of average due date. So calculation of average due date. Calculation of average due date. First column, please. Due date column. Second column. Okay, wait. Before that. Sorry. Taking dash as base date. Then the column will come due date, amount in rupees, then number of days from base date to due date, then product. What is the due date, people? 10th Jan. 26th Jan. So if it is 26th Jan, will take 26th or 25th? Okay, those people, those who don't know this point, I'll just repeat it one more time here. Guys, we have done this discussion already in the bills of exchange topic. I'm again discussing one more time. So guys, whenever you calculate a due date in the bill of exchange, how do you calculate due date? Transaction date plus credit period plus 3 grace days. And if that due dates happens to be a public holiday. Public holiday means what? The holiday which is already known to you in advance. Holiday known to us in advance. the holiday which is already known to us in advance. For example, Sunday. Does anybody have to tell you that Sunday is a holiday? It's understood that Sunday is a holiday. Apart from that, central government will release a notification called as official gazette. Official gazette is a document in which they'll mention that, okay, these are all the public holidays. So this is released well in advance. This is released very, very advanced. So obviously by seeing that, you get to know which are all the public holidays. So if the holiday is falling, sorry, if the due date is falling on the public holiday, if the due date is falling on the public holiday, then on public holiday, bank is not functioning, the shops are not functioning, so buyer cannot make the payment to the seller. So therefore, the preceding date will be taken as the due date. The preceding business day, the preceding working day will be taken as a due date. For example, the due date is falling on 15th August. The due date is falling on 15th August. 15th August is what? Public holiday. Do you know that in advance? Yes. So what will be your due date? Preceding business day. Preceding business day is what? 14th August. Another example. Due date is 15th August, which is Monday. Monday. This due date is 15th August. So on 15th August, is the bank functioning? Are the shopkeepers functioning? No. So what will be the new revised due date? 14th August. But 14th August is Sunday. Can we take Sunday as a due date? No. So guys, nobody is doing anything. You have to observe here. So preceding business day is also a public holiday. So what will you do? 13th August, that is Saturday, will be the due date. So if the preceding day is also a public holiday, the due date which is happening, the preceding to the previous day. Preceding to the previous day. 15th August, previous day is 14th. Preceding that, it is 13th of August. So 13th of August will be the due date. On the other hand, if the due date is an emergency holiday, means month, or unforeseen holiday, which is not expected. In that case, the due date cannot be the previous day because you are not prepared now. Here, you are well prepared in advance. You know that when holiday is coming and accordingly you can plan. Whereas this is a sudden holiday, people. In sudden holiday, how can you make the payment one day before? So tomorrow was, let's suppose, the original due date. Today afternoon, they have announced that there is a bank tomorrow. So can you make the payment today? There is no possibility. So in case of emergency unforeseen holiday, the due date will be the next following day. For example, 13th August, which is Monday, was the due date. But suddenly Monday was announced as a month. So what will you do? You make the payment on 14th August, which is Monday. Let's suppose 14th August, which is Monday, was the due date. 14th August was the due date. 14th August was the due date and this sudden emergency in month. So what will be the next day? You will try to make the payment on the next day. But next day is a public holiday. So it will be next day. Because don't tell 15th August means you'll go to previous day. So 14 to 15 will jump, 15 to 14 will jump. You'll keep on jumping like monkey here and there. No. Correct, Noka? 14th, unforeseen holiday. You will jump to 15. 15 is public holiday. So one day before. So like monkeys will be jumping up and down, back and forth. So you have to always be prudent. We'll go to the next day, which is 16. Guys, are you able to understand this concept, online people?
So same for Sunday also, no? Like if
Same.
15th was a Sunday
Then next
and
day.
not a public holiday, then next
So for
day.
example, 14th was Saturday. On this date, you're supposed to make the payment. Emergency holiday. Unforeseen holiday. Next day is what? 15th. 15th is what? Sunday. So you'll make the payment on 16th. Now clear?
Yes, sir.
Okay. Now if you see here, coming back. 10th January, due date. 26th January is a Republic Day. It's a emergency holiday, unforeseen holiday, or public holiday? Public holiday. So one day after or one day before? One day before. So 25th January is the due date. Now, 23rd March. 23rd March, nothing is given, guys. So we'll take that day itself as a due date. 23rd March. Next is 18th August. 18th August is Sunday, guys. So we'll take 18th August itself. Correct, no? No, sir. This is unforeseen holiday. So we'll take 19th August. No? This is a public holiday, known holiday. So one day before. Known holiday, one day before. So 17th August is the due date. So what they have done in question answer is basically the due date which is given in question, they have taken that. And what is the actual due date they have done separately. So you can write this also, nothing wrong. Now amount is how much? 500, 1000, 3000, 4000. 500, 1000, 3000, 4000. Now guys, from the due date, you will identify the base date, which is the highest date. Lowest date. Very good. So out of this 10 Jan, 25 Jan, 23rd March and 17th August, which is the lowest date? 10th of Jan is the lowest date. So what will be a base date now? 10th of Jan. So taking 10th Jan as base date. Taking 10th of Jan as base date. Online people, any issues?
No, sir.
So from 10th of Jan to 10th of Jan, how many days? 0 days. From 10th of Jan to 25th of Jan, how many days? Very simple. So 25 days of Jan minus 10 days of Jan, 15 days. In calculator itself, you can do. Next is 10th of Jan to 23rd of March. 10th of Jan to 23rd of March. Now, how do we do? Listen to very carefully. In Jan, totally how many days we have? 31 days. In 31 days, 10 days of Jan is gone. So how many days of Jan is left? 21 days of Jan. So 21 days of Jan. Feb is 28 plus March is 23. Total is 72 days. Guys, you have to travel forward. I'm telling one more time. From 10th Jan, I need to travel to 23rd of March. So from 10th of Jan, if I start working, how many days will I take to reach 31st of Jan? Sir, 31st of Jan, I need to reach. I'm currently on 10th. So 31 minus 10 is how much? So I'll take 21 days. I'll take 21 days to reach 31st Jan. Plus 28 days of February. Plus 23 days of March. So I'll take 72 days. That is from 10th of Jan. If I start traveling, I'll take 72 days to reach 23rd of March. Now 17th of August. Sir, I'm currently on 10th of Jan. Jan totally how many days? Sir, 31 days. In that 10 days is already gone, sir. So 21 days I need to travel in Jan. February 28 days I need to travel. March 31 days. Plus April 30 days. Plus May 31 days. Plus June 30 days. Plus July 31 days. Plus August 17 days. So total 219 days I need to travel forward. Any problem? All in people?
No, sir.
All of you using your calculators? Everyone? Gokul is not having calculator. Apart from Gokul, everyone else is. You got it? Okay. Now, guys. Next, 500 into 0 is 500. 500 into 0 is 500. Now, 1000 into 15 m plus 15,000. 3000 into 72 m plus 2,16,000. Very good. 4,000 into 219 m plus 8,76,000. Immediately press what? MRC. So what do you get? 11,07,000 rupees. What is the total of the amount? 8,500. Wonderful. Super. Offline, very enthusiastic. Online, no enthusiasm.
This is like one dream, sir. After doing so much calculation by hand.
Oh,
You just have to
you're
press-
happy that you're using a calculator.
You just have to press buttons now.
Nice. But this is very addictive. Once you get used to this fellow, dependence on brain is gone. So even for a small calculation, you have to rely on the calculator. That is the saddest part of this calculator. Now, what is the formula, please? Base date plus total product. Very good. Divide by total amount. Wonderful. What is the base date, people? 10th of Jan. Total product is 11,07,000. Divide by how much? 8,500. So what are you getting? 10th of Jan is equal to, 10th of Jan plus 130.23. So we have to round off this to round off. So 130.23 means round off how much? 130 only. So 10th Jan plus 130 days. I have to travel forward. So how do I do this? So total 130 days I have to travel forward. We are currently on which date? 10th of Jan, which means 10 days of Jan gone. Jan total how many days? So 31 days in Jan. In that 10 days of Jan gone means balance how many days of Jan? 21 days. So out of 130 days, I'll travel 21 days of Jan. So how much is balance date? 130 minus 21. 109. Then I need to travel 28 days of Feb. Then I need to travel. Okay, you don't have to keep on doing balance. You can approximately calculate. So 28 days of Feb gone. Then what? Then I need to travel 31 days of March. Then I need to travel 30 days of April. Let's see if there is any balance days. So 109 minus 28 minus 31 minus 30. So I'm getting 20 days. So 20 days balance means what? 20 days of May. So you'll go up to 20 days of May, which means from 10 Jan, if you start traveling 130 days forward, you will land up to 20th day of May. So what is average due date? 20th May, whatever the year is. Any problem, people?
No, sir.
Yes, boss. What happened?
You asked if there was doubt, I said no.
Acha, okay, sorry. Now, people. Guys, 20 May is what is it called as? Average due date, which means on this due date, if you make this payment of 8,500, neither the buyer is gaining anything, nor the seller is gaining anything. Neither the buyer is losing anything, nor the seller is losing anything. So this date, if you make the payment, everything is perfect, not a problem. But the question says that buyer is not making the payment on average due date. Instead, he is asking you that if I make the payment on 18th March, what is average due date? 20th of May. Now listen to me very carefully. Let's say this is the average due date. What is average due date? 20th May. This fellow is wanting to make the payment on 18th March. So is it early payment or late payment? 18th March, guys. 18th March is early payment or late payment? 18th March. This is the actual payment date. This is the average due date. This is the actual payment date. So guys, how many days in advance is the customer wanting to make the payment? From 18th March to 20th May, how many days? Sir, in March, totally 31 days. In that 18 days, if I minus 13 days of March plus 30 days of April plus 20 days of May. So how many days of advance payment? 63 days of advance payment. Now tell me one thing, guy. Tell me one thing, people. If somebody is making 63 days advance payment, will he expect something in return or not? Who is making the payment? Customer is making the payment. So customer will say that, look, boss, on this date, if I make the payment, neither you will gain anything, nor I'll gain anything. Neither you lose anything, nor I'll lose anything, which means both of them are okay with this date of payment, or both of us are okay with this date of payment. But I am giving an opportunity to you, seller. Buyer is telling that, seller, I am giving an opportunity to you where I can make the payment of 8,500 here itself, if you want. But since I'm making early payment, early payment to what I have already contracted. I have contracted one date, and if I take average of that date, it is this date. So if I'm making early payment, I am losing the opportunity of earning interest. I will lose interest because you have agreed that if I pay the total amount on 20th of May, you are okay with that. Which means for this intermediary period, I can invest this money in fixed deposit and earn interest at the rate of 1% per month. If you are willing to pay me this 1% per month interest, then I'm willing to make the early payment to you. Which means what? 1% per month means what? 30 days. Which means this guy is going to make 63 days advance payment, which means he's going to earn interest of 2%. Correct, no? Guys, this 8,500 rupees, if the customer is not making the payment here, he would invest this in the fixed deposit. How much money will he earn? He will earn 1% interest per month. He is got 63 days for payment. which means 2 months for payment. So how much money? 2% he will earn interest. So customer is telling that seller, if you are willing to pay me 2%, or if you are willing to give me a 2% discount, if you're willing to give me a 2% cash discount, then I am willing to make you the payment here. Now the seller will have two options. Either he will say yes or no. Why will the seller say yes? If seller feels that this 8,500 rupees what I'm getting here, and for this I have to give 2% cash discount, I'll be getting some amount less. This amount, if he feels that he can earn 3% interest for 2 months, then he will accept. If seller feels that by receiving this 8,500, so 8,500 minus 2% is how much? 8,330. 8,330. Am I right? Guys, since the customer is making early payment, we have a concept called as cash discount. No? Cash discount means what? When somebody is making early payment, we give them a discount. So 8,500 minus 2%, which means what? The customer has to pay 8,330. That is more than sufficient. Example I'm telling. Now, why will seller agree to lose this 2%? If seller feels that by getting this 8,330, and if I invest this money in my business or somewhere else, and if I am able to earn 4% for 2 months, then why will he say no? Because in 2 months, he's going to earn how much? 4%. For that, how much is going to lose? 2%. So extra, how much is going to earn? 2%. If seller feels that by receiving the money in advance and offering you a cash discount, with that money what is receiving in advance, if investing that money in the business or somewhere else, if he's getting more return than what he's paying, then anybody will agree for early payment. Anybody will be willing to give the cash discount. When will seller say no? When seller feels that no, by paying him 2% discount or by giving him 2% cash discount, I cannot earn anything. If that he feels, then he will not accept for the early payment. Are you able to understand? So now here in this case, seller has agreed for early payment. How much early payment? 63 days early payment. So interest calculation is what? 8%. Which means what? Interest is equal to 8,500 into 8 by 100. This will give me the interest for how many months?
1 year.
1 year. Is the customer paying money 1 year in advance? No, he's paying how many days in advance? 63 days in advance. So for 63 days, how much interest? 63 divided by 365. So please calculate. 8,500 into 8% into 63 divided by 365. 117.36. 117.36. Now the question that they are asking is, determine the amount to be paid in option A. That is, if the person Y is making the payment on 18th of March, how much money totally he'll make the payment? Can I say, I'm just doing roughly, don't do anything, okay? Originally, this fellow is supposed to pay payment how much? 8,500. Originally, he's supposed to make the payment of 8,500. Since he's making early payment, so who is getting a cash discount? Y is getting a cash discount, customer is getting a cash discount, buyer is getting a cash discount to the extent of 117.36. How much money he'll pay? 8,500 minus 117.36. 8,380? 382.6. So round off. 8383. So 8383 is the payment that he is making. Any problem with this? Now guys, can I say this 117 rupees, who is losing? Seller is losing. Seller will lose this money only if he feels that the money what is getting in advance, this money he'll invest somewhere and make money more than 170. So if he's earning more than what he's losing, then only this guy will accept the early payment, or else he'll not accept the early payment. Are you able to follow? Now, how do we do this in fair working? I did a rough working now, no? So guys, after this 20th May, no? This is only explanation. I have to write it properly. So after calculating average due date, you have to write it here. if seller, sorry, not if buyer wants to make the payment, the buyer wants to make the payment on which date? 18th March. 18th March, it results into early payment. It results into early payment. If the buyer wants to make the payment on 18th March, it results into early payment. Am I right or wrong? Therefore, the buyer can expect, therefore the buyer can expect a cash discount or rebate for early payment. If buyer wants to make the payment on 18th March, it results into early payment. Therefore, buyer can expect a cash discount or rebate for early payment. Final payment is equal to total amount plus interest or minus interest? Minus interest received or cash discount or rebate received. Whatever you want to say, you can say. So total amount is how much? 8,500. Interest, you have to calculate. So you can show the calculation here itself. 8,500 into 8% into 63 by 365. So 8,500 minus 117.36. So it is 8383. The buyer wants to make the payment on 18th March. It results into early payment, and the buyer can expect a cash discount for early payment. So here instead of therefore, you can make it as and the buyer can expect a cash discount or a rebate for early payment. Therefore, the final payment is calculated as follows. If buyer wants to make the payment on 18th March, it results into early payment, and the buyer can expect a cash discount or a rebate for early payment. Therefore, the final payment is calculated as follows. Online people, are you able to understand what are we doing?
Yes, sir.
Similarly, the second one. Now the payment is happening on 14th of July. What is the due date? Due date is what? 20th May. Average due date. 20th May is average due date, but this guy is now making the payment of 14th of July. So can I say he's making a late payment? For late payment, he has to pay interest. So now, second option. If the payment is made on 14th July, it results into late payment for which he has to pay interest. Therefore, the final payment is calculated as follows. So final payment is equal to total amount plus interest. Very good. Total amount plus interest. What is total amount? 8,300. Sorry, 8,500. 8,500. Now, guys, interest 8,500 into 8% into. Now we have to calculate. Guys, average due date is what? 20 May, which means on 20 May till midnight, if you make the payment, no interest. But 21st day it goes interest. So May total how many days? 31 days. In that minus 20 days. So 11 days of May, which means even if you delay 11 days in May, you will land up to 31st of May. So 11 days of May plus 30 days of June plus 14 days of July. So 55 days of late payment. 55 days of late payment divided by 365. So 8,500 into 5% into 55 divided by 365. 64. How much did I take? I took 5, sorry. 8,500 into 8% into 55 divide 365. So it is 102.4. So 102 will round off. So 8,500 plus 102.4 is coming. So it will be 102 only. 8,500 plus 102 is how much? 8,602. This is the final settlement. I have to put a box. Final payment is equal to so much. So what are they asking? Determine or calculate the amount to be paid. So as per option A, the amount to be paid is how much? This. So you have to put a box. So if the payment is made on so and so date, the final amount of settlement is 8,330. Directly you can put a conclusion and put a box. This box will help the invigilator, the evaluator to understand that this is the final answer. And sometimes, if you're lucky enough, this person might not go to the step mark. He might go to the final box answer and put a tick mark. Rarely it is possible. Sometimes the person just looks at the final answer, and if he matches with his key answers, and he might put a tick mark. But that doesn't mean that we'll not write step mark. Some people like majority of the people will go steps. Few people, they don't go with the steps. So we don't know who is correcting. So we'll prepare proper steps. But highlighting box will give you an additional advantage. So highlighting the key answers, key points, or important final conclusion has to be done. Final people, are you able to follow?
Yes, sir.
No? Only one responded. Al is not listening, no? I know.
You're listening on
Alvin? Anna, tungidiya? Kanna, Iriya, Alvin.
Yes, sir.
Okay, Varsha. Offline people.
Yes, sir.
Anybody is finding difficulty? Can we go for a break now? We'll come back and continue. Thank you so much. Yes, people, welcome back to the break. So guys, we have completed 2 questions from ICAI study module. So let's head towards the third question. So guys, did we get the right answer? Did you cross check? Perfect. Now guys, third question, slightly different. What different? We'll understand. They're telling that calculate average due date from the following information. They have given the date of bill. They have given a bill. Term is given, amount is given. So the first 2 questions that we've done so far, guys, they have themselves given the due date of payment. Here they have given the date of bill, which is means date of transaction. Term is given. So can I say you have to calculate the due date here? Hello? Yes or no? So here, in addition to the 4 columns what we drew, we'll draw 2 more columns. So here the first column, now it is going to be the date of bill. Second is term. Then you have to calculate the due date. Then number of days from base date, amount and product. Can we do it? It's like that they've given each and every transaction date. Assume February is 28 days. Why? Because February is 2020. 2020 is a leap year. So what will you do? If this was not mentioned, you will take February 28 days. So calculation will go wrong. So what they said, forget leap year. In 2020, February, assume 28 days and do the calculations. So whatever note they have given, we have to follow that. So let's do it, guys. Heading: calculation of average due date. Please don't write ADT in the exam, you lose marks. Taking dash as base date. What is that? We have to identify. The first column is, guys, date of bill. First column is date of bill. Second column is term of bill. Then is due date. Then it is number of days from base date. Then amount in rupees. Then product. What is the date of bill, guys? First date. Yeah, if you feel that the page is shorter, you can use both the sides. 10th August, then 20th, 20th October, then 22 October, 22nd October, then 4th December, then 14th Jan, then 14th March. Okay, term of bill is, first one is 3 months, then 60 days, then 2 months, 60 days, 2 months. Now all of you know how to calculate the due date. 10th August plus 3 months plus 3 grace days. For bills of exchange, always 3 grace days needs to be added. So 10th August means September, October, November. So 10th November plus 3 grace days is 13th November. So 22nd October plus 60 days. How do you calculate? Sir, we are in October 22. So October totally how many days? 31 days totally. In that 22 gone means 9 days. 9 days in October. So 60 minus 9 will give me balance 51 days. Then we do the calculation here itself. Total 60 days. Guys, total 60 days we have to travel forward. October total 31 days. In that 22 days is gone already because we are on 22nd. The transactions are 22nd. So 23rd to 31st, how many days? 11 days. How do I do that? So total 31 days in October minus 22, which means 11 days. Sorry, 9 days. So 60 minus 9 days of October. So I'll get balance how much? 60 minus 9? 51 days. Minus after October, how many? Which month? November. So 30 days of November. So I'll get 21 days of December. So 21st of December is the landing date. Plus 3 grace days is 24th December. 24th December. 4th December plus 2 months plus 3 grace days. So 4th Jan, 4th Feb. 5, 6, 7. So 7th Feb is the due date. 7th Feb is the due date. Any problem online, people? Anyone is finding difficult to calculate the due date? Hello?
No, sir.
Okay. 14th Jan plus 60 days. So guys, total 60 days, okay? In that, we are on which days of Jan now? We are 14. We are on 14th of Jan. So 31 minus 14 days gone means 17 days remaining in Jan. So minus 17 days. If I do 60 minus 17 is 43 days total remaining. In that minus 28 days of Feb. So 43 minus 28 is 15th March. 15th March plus 3 grace days is 16, 17, 18. Yes, please calculate, don't copy. You have to apply your mind. 18th March. Next one, please tell me. 17th May. 17th May. Please mark these two transactions important because people often make mistake here. People often get confused here. Total 60 days. In that 17 days gone off Jan. So remaining 43 days. Then 28 days of Feb gone. Then balance is 15th March. Google, you're getting an answer. Now people, from the due date, identify the date which is the least date. Which is the least date? 13th November is the least date. So that becomes your base date. So taking 13th November as base date. Now in textbook, they would have taken something else. They would have taken 10th August. They have taken the transaction date as the base date. You take any date, you'll get the answer. You take any date, you'll get the answer. But if you take 10th August as the due date, from 10th August to 13th November, unnecessarily you have to do a calculation for this. If you take 13th November as a base date, this will become 0. So it will save time for me. So I'm acting smart. So I'm telling from the due date column, identify the least date. You take any date, guys, you'll get the answer. Because the format is designed in that way, you take any date, you'll get the answer. But we'll take 13th November as the base date. So from 13th November to 13th November due date, how much is the total number of days? 0 days. Amount is 6,000. Product is 0. So let me first finish off the number of days. So number of days from base date. Base date is 13th November. 13th November to 24th December. How many days?
41.
How, sir? So total November has got 30 days. In that 13 days, if I minus, so balance 17 days of November plus 24 days of December. So it is 41 days. If anyone has got any doubts, please ask me. Sometimes it so happens that you might get stuck and you're not in position to calculate. So please ask, don't be hesitant. Sorry? Because they have taken base date as 10th August now. We are taking base date as what? You didn't listen to what I said. See, you can take the Danish read 10th August also you can take as base date. But what will happen is if you take this as base date from 10th August to 13th November, you will end up getting this number of days. So unnecessarily for this, you have to calculate. If I take 13th November as base date, all this is 0 now. Answer will be same. No, answer will be same. You take, at the end we see, we'll match and see. We'll get same answer. At the end, we'll get the same answer. I'll prove it. Now, people, 13th November is base date. From that, I need to travel 7th of Feb. So how do I do that? Sir, in November, total 30 days. In that 13 days of November already gone. So balance days is how much? 17 days of November plus 31 days of December plus 31 days of Jan plus 7 days of February. Total 86 days. Next is 13th November to 18th March. So how many days in November? Sir, 30 days in November. In that 13 days already gone. 13 November, 13 days already gone. So balance is 17 days. 17 days of November plus 31 days of December plus 31 days of January plus 28 day of February plus 18th day of March. How much? 125. Then 17 days of November, 31 days of December, 31 days of January, 28 days of February, 31 days of March, 30 days of April, and 17 days of May. Total
Sir, shouldn't that be 122?
Why 122?
Because
Say very simple.
first will be 17 and then December.
November ka 17, December ka 31,
Yeah.
Jan ka 31,
31,
Feb is
28.
28, March is 18 now. Total is how much?
Yeah.
125. Correct, no?
Yeah.
As for last one, 17 days of November plus 31 days of December plus 31 days of Jan plus 28 days of February plus 31 days of March plus April 30 days plus May 17 days. Total is 185. From 13th November, you have to travel forward to 17th of May. Clear? Online people, are you all clear? Varsha?
Yes, sir.
Okay, Srinidhi left the meeting. I don't know why. Okay, anyways. Alvin, you able to follow?
Yes, sir.
Now, what is the amount, people? What is the amount? 6,000, 5,000, 4,000, 2,000, 3,000. Please do the product. So 41 into 5,000 m plus 2,05,000. 86 into 4,000 m plus 3,44,000. 125 into 2,000 m plus 2,50,000. 185 into 3,000 m plus 5,55,000. Please don't copy, all of you independently calculate. Then MRC 13,54,000. Same answer, everyone got? No, book will not match. Book final answer will match. Book final answer will match. What is the total amount?
135.
Okay. Okay, not okay. Online people?
Yes, sir.
Now, average due date is equal to base date plus, very good, total product divided by total amount. Base date is 13th November plus 13,54,000 divided by 20,000. Guys, all of you got the same amount, 13,54,000. Everyone, Karunya, same amount. Gokul, same amount. So 13,54,000 divided by 20,000 is how much? 67.77. 67.7. So I'll round off to 68. 13th November plus 68 days. So how do we do it, guys? So we are in 13th of November. November total how many days? 30 days minus 13 November. So 17 days of November. So balance how much? 51 minus 31 days of December. Minus 31 days of December. You land upon 28 days of Jan. So average due date is 20th Jan. Is it matching? Is it matching or not matching? Online people, matching or not matching? You want to do this question one more time? What is it? Guys, same answer. Average due date. Hello, online people.
Yes, sir.
So in this question, what did we learn? In this question, additionally, we learned that how to calculate the due date. So in the first two questions, the due date was automatically given. Here we learned how to calculate the due date. So two additional columns, guys. Two additional columns. Can we go to the next question? Why? Okay. What Dhanesh is asking is, sir, in this question, they took August 10 as a base date. Then why did they calculate due date? Because due date ka column they have not utilized. But why due date is required? Because you took number of days as base date. Up to what date will you calculate? Due date only, no? So without due date column, you cannot proceed forward. So in the question, due date is done. Why? Because base date is 10th August. But from base date, you travel to which date? Each and every individual due date. So due date column is compulsory required. Offline people, all of you clear with this, no? Abdul? Jana? Right. Now next question, people. Fourth one, once again, if it is an easy question, I'll give us homework because for unilateral transaction, there are almost 15 questions that we have to do. So all the questions I'll not do. So half of the question will be homework. So let me read this question. If it is tricky, I'll do it. If it is not tricky, I'll give you to do as homework. The fourth one says that a trader having accepted the following several bills falling due on different dates now desires to have this bill cancelled and accept a new bill for the whole amount payable on the average due date. So basically, they want to calculate the average due date. Date of bill is given. Usance of bill is given. Usance of bill means what? Term. So please make a note. This is term given. So you're supposed to calculate what? You're supposed to calculate what due date. So first column is date of bill. Second column is term of bill. Third column is due date. Fourth column is amount. Fifth column is number of days. Last is product. So can I say this is a normal question? Please take it as homework. So this is the average due date answer. Fifth one is bilateral transaction. Fifth one is bilateral transaction. I think there are 12 questions in the textbook. I think there are 12 illustrations. All are different. After 12th one, 13th question is a book back exercise question. So this is also bilateral. 14th one we'll do it, guys. This is a exercise book back exercise question, and also this question has come once as a past exam question. So this same question was asked in the past examination paper once. So let's do the 14th question, guys. Let's do the 14th question. Anand purchased goods from Amrita. The average due date for the payment in cash is 10 August 2020. They have given the average due date, people. They have given the average due date. And the total amount due is 67,500. So the amount that we have to pay in lump sum is 67,500. And the date on which we have to make the payment is 10th August. That is the average due date on which if you make the payment, neither any person is gaining nor any person is losing. So what is the requirement? How much amount should be paid by Anand to Amrita if total payment is made on the following dates? Now they're telling that if the payment is not made on this date, and if the payment is made on any of these dates, what is the interest to be calculated, to be added or deducted, and what is the final amount to be paid? So if the total payment is made in the following dates and the interest considered is 12% per annum, then in the following cases, what will be the final amount of payment? So 10th of August is average due date. So on the average due date, if you make the payment, what will be the payment value? Same 67,500. Same 67,500. So payment on average due date. So principal amount is how much? 67,500. 67,500 is principal amount. What does principal means? Principal means the original amount that we have to pay. The original amount we have to pay on the due date. On the due date, if you don't make the principal payment, then you have to calculate interest on the principal. What is interest? When somebody is giving you this amount, or when somebody you are supposed to make this payment to somebody on the due date, and if on the due date you don't make the payment, you make a late payment, which means you are enjoying that money for additional period. Since you are enjoying that money, opposite person is not enjoying that money, so he will demand interest on that amount. So here, guys, this 67,500 is the payment made on the average due date. Average due date is the agreed date. Both of them are agreeing that okay, on this date I'll receive the payment. On this date you make the payment. So on that date, if the payment is happening, will we calculate any interest? No interest. So total amount to be paid is how much? 67,500 only. Any problem? Online people, any problem? Next is, sir, the payment is not made on 10th of August. The payment is not made on 10th of August. It is made on 25th of August. Early payment or late payment? Guys, average due date is 10th of August. But the actual payment date is 25th of August. You're supposed to pay here, but you're paying here. So can I say there's a delay in payment? Late payment. So for late payment, you have to pay interest. You have to pay interest on the late payments. For how many days? 25 minus 10. So for 15 days, you have to pay the interest. So what is the principal amount? Principal amount is 67,500. What is interest? So 67,500 into 12 by 100. This will give me interest for the entire year. Are we delaying for the entire year? Are we delaying for 365 days? No, we're delaying only for 15 days. So into 15 by 365. So the interest what you have to pay is 333 rupees. So for enjoying the 67,500 additionally for 15 days, the buyer, the customer has enjoyed the 67,500 for how many days? 15 days. For that, he has to suffer a interest of 333 rupees. So total how much amount he has to pay? 67,500 plus 333, which is 67,833. This is the total payment he has to make. Any difficulty? Online people, any difficulties?
No, sir.
Next is 30th of July. Guys, you're supposed to make the payment here. Average due date is 10th of August. But actual payment date is what? 30th of July. So guys, you're supposed to make payment here. But actually you're making payment in advance. Can I say it's an early payment? So when a person is making early payment, since he's making early payment, he will expect a cash discount, which means he will want to receive the interest. So how many days in advance is making payment? Sir, 30 July is making the payment. So which means 1 day of July plus 10 day of August. So can I say 11 days in advance? Yes, 11 days in advance. Yes or no? Online people, please respond. Yes or no?
Yes, sir.
11 days early payment. So what is the principal amount? 67,500. Who has to pay this money to whom? Customer has to pay this money to the seller. And 244 rupees, who has to pay to whom? Seller has to pay to the customer. So customer is saying, I have to pay you 67,500. From that, the 244 what you have to pay, I'll minus that and give you the balance. Correct, no? So 67,500 minus 244, he will give you only 67,256. So customer will pay the net amount to seller how much? 67,256. So how did I get this? 67,500 minus 244. This is a rebate received. This is a discount received. This is an interest received. So the money what we have to receive, we minus it from the money what we have to pay and give the balance. Any difficulties?
No, sir.
So 14th question done. 15th question, please take it as homework. Exercise question, please take it as, no, sorry, this is not 50, exercise question. This is RTP May 18 question. All of you have got the scanners? So please highlight and put your homework. 14th we did down, no? 14th is what we did. You didn't do it? Then do it as homework. We'll do 16th question, guys. We'll do 16th question now. 16th question says that Mehnas accepted the following bill drawn by Jain.S. Guys, this is a RTP November 18 and November 19 question. So both these, this question is asked 2 times in revision test paper, November 18 and November 19. So question says that Mehnas accepted the following bill drawn by Jain.S. So who is the customer? Who is the seller?
Jain.S is seller and Jain.S is buyer.
Customer, Mehnas is customer or buyer, Jain.S is. So seller will draw the bill and the buyer has to accept, customer has to accept. Wonderful. So guys, Mehnas has accepted 4 bill, which means what? Mehnas has purchased 4 different times from Jain.S. So first time she's purchased for 4,000 rupees. The credit period was 4 months. Second time she purchased 5,000 rupees. The credit period is 3 months. Then she purchased for 6,000 rupees. Credit period is 5 months. Then she purchased 5,000 rupees again worth of goods for again 3 months credit period. So 4 different transaction, 4 different amount, 4 different credit period. The person will go mad. So he's telling that the entire amount he wants to make the payment on a single date in such a way that all this credit period are satisfied. We want to arrive at that date, that center point of date where I make the total payment. What is the total payment? 4 plus 5 plus 6 plus 5 is 20. This 20,000 rupees, Mehnas wants to make a single payment, one shot payment on that date in such a way that this credit period, what is allowed to her, it has been enjoyed. The benefit should be continuing. The only thing is extra benefit Mehnas should not get, extra benefit Jain.S should not get. So average due date is that date when you make the payment. Whatever benefit is already agreed by Jain.S and CA.Prathik, they'll get that. Over and above that, extra benefit should not be got. So what is that extra benefit? So in the 14th question, we calculate this interest. No, this interest is the extra benefit. So what happened in this question? Had they made the payment on average due date, the amount whatever is agreed with agreed benefit is being paid or received. But in next two questions, if you see, when there is late payment and early payment, there is a additional benefit coming to one person and it is lost by another person. For example, here, when the payment is happening on 25th of August, this was late payment. So late payment means it is a penalty for whom? Customer. Advantage to whom? Seller. And here, when the early payment is done, who's getting the benefit? Customer is getting the benefit, and it is a problem for seller. So they are getting a advantage or disadvantage other than what is agreed. Advantage agreed and disagreed is what? If the payment is happening on the due date, this is the benefit agreed and the disadvantage agreed. Anything over and above that, if benefit is coming and going, then that is to be avoided. So to avoid that, then the payment has to be made on average due date. So here we have to agree on the average due date on which the entire 20,000 is made in one single payment. He wants to pay all the bill on single day. Find out that date, which is average due date. Further, interest is charged at 18% per annum, and Jain.S wants to save 157 by way of interest. Jain.S is the payer. She wants to save 157 rupees, which means she has to do early payment for that or late payment. All in people. Jain.S wants to save 157 rupees, which means she wants a cash discount. Only when she gets a discount, she'll save. Nah. To save, she has to make early payment or late payment. All in people not responding. I'm going. Bye. See, no response again. Lazy goose.
So we're listening.
Reply. Alvin, Varsha. So we have to calculate what? Early date of payment. So we have to make early payment. Jain.S has to make early payment so that she can get that benefit. So we have to calculate the early date. So calculate the date on which Jain.S is he or she, okay, whatever, which he has to effect the payment to save the interest of 157. So two calculations. First, we have to find the average due date. Second, we have to find out that date when the actual payment is done. And that date should be a date which, when she makes the payment, she earns 157 rupees by way of interest. So first, normal calculation, guys. Calculation of average due date. Calculation of first average due date. Please don't write AVG in exam. You write full form. Full form. Taking dash as base date. First column, please. Date of bill. Second column, please. Term of bill. Next is due date. Very good. Then amount. Number of days from base date. Finally, product. Now, people, date of bill. March, then 16th March, then 7th April, then 17th May, then that's all. Sir, utta neenga baattukku full எழுதிட்டே இருப்பீங்க இல்லையா? Sorry. Term of bill. Guys, it is all in months. So it is all in months. So what you can do in bracket, you can put here in months. Now, tell me the term of month. Sorry, term of bill. 4 months, 3 months, 5 months, 3 months. Due date, very easy. Quickly, due date, please. 11th of July. So March, no, April, May, June, July. So 8th of July plus 3 grace days, 9, 10, 11th of July. Next, March, April, May, June, 16 June plus 3 grace days, 19th June. 7th April plus 5 months. So April means May, June, July, August, September. September 7 plus 8, 9, 10. 10th of September. Next. What happened? What discussion is going on there? Here. Next date. 20 August. Amount please. 4,000, 5,000, 6,000, 5,000. Now, number of days from base date. So I want a base date, guys. So July, June, September, August. July, June, September, August. In that, which is the least month? June. So can I say 19th June will be the base date? Now, by mistakenly, people will take 11th July as the base date. You will get the right answer. The problem is that you will get the answer for the 0. For this, you will get negative. You will get the answer in negative days, because if you take 11th July as base date, you have to travel backward for June. So it becomes minus. To avoid that minus only, I am taking the least date. So it is 19th June. So from 19th June to 11th July, how many days?
22.
How, sir? So total June 30 days. In the 19 days gone. So 11 days. 11 days of June plus 11 days of July, 22 days. Then 19 June to 19 June, 0 days. Then 19 June to 10 September. 19 June to 10 September. So June total 30 days, sir. 19 days already gone. So balance 11 days remaining in June. Plus July 31 days, plus August 31 days, plus September 10 days. How much? 83. Very good. Then 30 minus 19. So 11 days of June, 31 days of July, 31 days of, no, 20 days of August. So 62. 4,000 into 22, M plus 88,000. 6,000 into 83, M plus 4,98,000. Then 5,000 into 12, M plus 60,000. What did I say? Oh, sorry. So what is it? 62 days, no? So how much? 3 lakh? Guys, please confirm. Eight lakh 96,000. Is it right? Total amount is 20,000. All in people, are you all getting the same answer?
Yes, sir.
Okay. Average due date formula, please. Base date by total, product date by total amount. Can you write TP, TA in exam? Who said yes, sir? நீ எழுதுமா எழுது. காப்பி அடிச்சியா? இனி பார்த்து போர்டு பார்த்து காப்பி அடிச்சியா? 19th June plus 8,96,000 divided by 20,000. 8,96,000 divided by 20,000 is how much? 44.8. Round off to 45 days. So June totally how many days, guys? 30 days. So 30 minus 19 is 11 days of June plus in 45 days, 11 days of June gone. Balance how much? 34 days. In that, after June, it is July. So 31 days of July. So 3 days of August remaining. So 3rd August. So guys, 3rd August is the average due date. on which if the entire payment of 20,000 is made, neither Menas is gaining anything nor Shehnas is gaining anything by way of interest. But the question says, no, Menas wants to gain interest. So if Menas wants to get the benefit, then she has to make early payment. So how many days early? You have to calculate. Second part. If Menas wants to save, rupees 157 by way of interest, then she has to make an early payment. Therefore, the actual date of payment is calculated as follows. Guys, okay, not okay?
Okay, sir.
Now, how do we do it, guys? You'll do it? Then try. Sorry? You calculated. So now, guys, very simple. Interest formula. Interest, how do we calculate? Amount is equal to rate of interest by 100 into number of days by 365. The only twist here is that interest is given, which is 157. Amount is known, 20,000. What is rate of interest? 18 by 100. Number of days early payment is X, divided by 365. Okay, not okay? So, X is equal to 157 into 100 into 365 divided by 20,000 into 18. X is equal to how much?
So 15.9, so 16.
15.9,
so 16.
Yeah, round off to 16 days. So from average due date of 3rd August, you have to travel 16 days behind. So 16 days I have to go backward. So we are on 3rd of August. On 3rd of August, end of the day, we have to make the payment. So if 3 days of August, if I minus, I'll have balance how many days? 13 days remaining to travel backward. So 16 days minus 3 days means I'll land on 31st of July. 31st of July minus 13 days. 31st of July minus 13 days. 18th July. If you find difficulty, if you feel that what you've done is right or wrong, if you want to check, 18th July, forward travel 16 days. And check if your answer is average due date or not. That is, 18th July is the actual date of payment. You calculate it now. If you doubt that this is right or wrong, if you feel that this is doubtful, then you travel forward and see, no. From 18th July, you travel forward. See, forward, you know how to calculate. Backward is difficult. So once you do backward, and once you get the answer, just cross-check by doing forward and see whether it is matching or not matching. So 18th July plus 16 days means we have to get what? 3rd of August. Google difficulty in understanding this? Easy? Should I repeat one more time? How to find X? Okay. Very simple, Kana. This is mathematics. So 157 is given, 20,000 to 8 by 18 by 100 to X by 12. So in this entire equation, can I say number of days, how much days in early we have to make the payment? We have to identify. Correct? Now let's imagine the question is saying that 16 days early payment we made. If the question is saying 16 days early payment is made, you have to calculate interest. Then what will you do? 20,000 into 8 by 100 into 16 by 365. Now what they have done, they have given the interest. Now this is missing. So what will you do? So here x is this side. Okay. Now you will take this numerator to other side. So in the numerator, when it goes to other side of equal to, it comes to the denominator. It come here 20,000 into 18. And this numerator part, when it goes to other side of equal to, it will go in the denominator. Sorry, the denominator of 100 and 365, which is here, will go to the other side of equal to in the numerator. 100 into 365. This is okay. Then what am I left with? X. So x is equal to 100 into 365 into 157 divided by 20,000 into 18. Okay, not okay. Now guys, logical part of this we'll understand. So tell me one thing. 20,000 into 18% is how much? Sorry? 3,600. Now understand this. Guys, if I want to make or if I want to save 3,600 rupees, then I need to make 365 days advance payment. In other words, if I want to make payment 365 days advance, if I want to make the payment 365 days advance, interest is 3,600 because for 1 year, guys, if 20,000 payment is made 1 year advance, 365 days means what? 1 year. If you make 1 year early payment, what is the interest? 20,000 to 18 by 100. Or if you delay the payment by 1 year, so 20,000 to 18 by 100. Correct? Now, if you're making 365 days earlier payment, which means 1 year early payment, the interest what you save is 3,600. Therefore, I want to save 157 by way of interest. So how much days early payment you have to make? If you cross multiply, you'll get the answer, which is 16 days. So this concept and formula is nothing but, guys, this is a concept that is derived from VB technique, which is vegetable vendor technique. Most of your formulas, guys, is derived from this vegetable vendor technique. What is vegetable vendor technique? 10 kg tomato, 120 rupees. Then for 5 kg, how much? We call this as something in mathematics. Cross multiplication. One more name is there for this. Unitary method. Unitary method. This is also called as unitary method. So 10 kg tomato, 120 means for 5 kg how much? Cross multiplication or unitary method. Most of your formulas in accountancy and mathematics are derived using this technique only. To save 3,600 rupees, you have to make 365 days early payment. Therefore, to save 157 rupees, how much days early payment you have to make? Cross multiply, you'll get it. Same thing we have done here. Now understand this. 3,600. Sorry. 157 into 365 divided by how much? 3,600. Now 157 into 365. This 20,000 into 8 by 100 is what? 3,600. 20,000 into 18 by 100 into x by 365. So 157 is equal to so much. Emma, whenever I explain mathematics, she laughs at me. I know. This 20 into 18 by 100 is how much? 3,600 into x by 365. Am I right? So can I say 157 is equal to 3,600 to x by 365? So what did I do? This 20,000, 18 I multiplied. So I got the amount. Now this is x. So how do I find this? X is equal to 157 into 365 divided by 3,600. 157 into 365 divided by 3,600. So whichever comfortably you can do. You can simplify these both together. You get 3,600. Into x by 365 you do. And then simplify it this way. However you feel comfortable. Now Gokul, you are able to understand. or have I complicated more? No, I have to ask because I'm not a math student now. So I have to see like, oh yes, this is right or wrong. Explanation is fine. Or should I more complicate? Like both, sir. So guys, 16 days in advance, we have to make the payment in order to save 157 rupees. So what date are we supposed to make the payment? Sir, we are on average due date what? 3rd August. So we have to travel 16 days backward. So till 3rd end of the day, we have time. So which means August, we have how many days? 1, 2, 3. So out of 16 days, guys, 3 days of August gone. Means balance is 13 days. So 13th day will be on which date? 31st of July. So 31st of July minus 13 days will be 18th day of July. So this is the backward calculation. If you feel that I'm doubtful about my answer, with what date you got, no? Travel 16 days forward. If you come on the same date, 3rd August, then your calculation is right. Because forward calculation, you find it easy. Backward is a little bit tricky. So you can cross check by doing the forward calculation. So conclusion. If Mehnaz wants to save 150 cent by way of interest, she has to make the entire payment, of rupees, how much? 20,000 minus 157, which is how much? If Mehnaz wants to save 150 cent by way of interest, she has to make the entire payment of 19,843 on 18th July 2018. Is what is the requirement? Calculate the date on which he has to make the effective payment to save the interest of 157. So how much he or she has to pay? Okay, they have basically asked only the date. So with the date, they have stopped it. Let's suppose in this question, they ask what is the final amount of payment. Then you have to put this conclusion. So 19,843 is the final amount of payment. She has to make it on 18th of July so that she can earn 157 by way of interest. She can't pay 20,000, boss. To save 157 only, she is doing so much of early payment. So obviously, she'll pay the balance amount only, no, after getting the cash discount or rebate receipt. 16th question, interesting.
So can I just copy down the conclusion?
Sorry?
I want to copy down the conclusion.
Yes.
Yes, sir. Done.
Now, 17th question, homework. Please make a note of all the homework now. 17th question, homework. Try it as homework, but I feel you might need my help on this question. But try it. Try it once. 18th question, try it once. Homework. '19 homework. Guys, all of you noting it down, no? '20 is homework. 21 homework. All similar concept, just calculation. Yes, in this average due date, you will make the mistakes, where you calculate the number of days. So that calculation will make mistake. Now we did reverse calculation, no? You using the interest, we calculated the original day. So that will make mistake. So all this reverse calculation, number of days calculation is what will make mistake here. So for that, you have to keep on practicing. That is the only thing. Otherwise, this topic is very easy. 22nd question, homework. Now let's suppose, guys, in this question, the due date is not given. Instead, they say credit period. 1 month, 2 month, 3 month, 4 month. What will be the due date? Please tell me. August 5 plus 1 month plus 8th of August. Wrong. Sorry, 8th of September. That is also wrong. Anywhere in the question have they told you that this is a bill? Hello. For every credit period, you'll add 3 days of grace. Huh? Why in this earth only bills of exchange is existing? Normal credit period is not existing for you guys. Huh? Meera purchased goods on credit. His due dates. How is Meera his? All gender change. Anyways, her due dates for payment are given below. You are required to calculate average due date. Transaction date is given. Transaction date means what bill data? Transaction date is goods buying and selling date. Now, just because we have done all bills, don't keep on adding credit days. Normal creditor data transaction boss. Normal creditor data transaction. In that, you add grace days. Anywhere in the question have they told this is the bill of exchange? It's a normal transaction. Bill of exchange happens only then bills receivable, bills payable will come into picture. Then you will add grace days. This is a normal credit transaction, debtor and creditor. So what is the due date now? 5th of September. 5th of September. September 15 plus 2 months. 15th November. So this is one place where people make mistake. I'm telling you, ICAI will give you this question for 5 marks. Easy question. You will feel halwa this question is. But what will you do? 3 days of grace you will add and come. What marks you will get? Gone 5 marks. This is how people lose. Bill is not given, no. If the word bill is given, oh hello, how to find Amma? Come here. Date of bill. Bill, the word bill is given means grace days has to be added. In this question, anywhere have they given the word bill? Hello? Yes. So please make a note of that. Grace days is added only if the question says that there is a bill existing. Every question in average due date doesn't falls with bills payable and bills receivable. Normal transaction also can happen. But in this question, luckily they have themselves given the due date, so you don't have to worry.
So it's a bill only.
No.
So in this question, it's bill only.
They have added, agreed. But I'm telling you, if they have given the due date, whatever the due date they have given, you take it. So which means if the due date is September 8, which means this is a bill related question. But I'm just telling you, there's no due date given, nothing is given. Because there's one such question, which we'll do in the next class, where you will end up adding grace days, but there's no grace days to be added because it's a normal transaction question. You have one question. That's why I'm telling you. In this question, they have given the due date. Since the due date is given, if you observe it, it is all looking like a bill because they've added 3 grace days. So which means what? This transaction, all bills of payable transaction. I just gave you an example that imagine if the due date is not given. And also, nowhere they mentioned that this is bills payable. Then what to do is what I'm trying to say. Are you able to follow? Online people, hello?
Yes, sir.
Okay, 22nd question, homework. 23rd question, pending. 24th question, pending. 25th question. Guys, we remember doing this question? The following amount was due by X, due to X by Y. Y wants to pay. I said you that example exactly came in exam PEP 2019, November 19. This is also homework. Republic Day, Sunday, same question, only number change. So sometimes CA Foundation gives us a feeling that we are matriculation students. Same question. 25th question homework. 26th question pending. 27th question pending. 28 pending. 29 is missing. Directly 30. Very good. Keep 30 pending. 29 is there? Where is it? Oh, sorry, it is there. Homework. 29 homework. Subik says, why did I say homework? Okay. 30. 31 is missing. So 32 directly. 32 is homework. We have done this question somewhere. This question is, it's your exercise, book bag exercise question. What if the payment is made on due date? What if the payment is made late? What if the payment is made early? Same question. Number, name change. PEP November 18 question. RDP November 22 question. Apart from that, this was asked again in the exercise, book bag exercise. So this was for 5 marks. 32nd question homework. Same question, no change. You remember this tabular column? Principal amount, interest, final amount.
So we have to make a tableau, no?
Presentation, anything is fine. However you're comfortable. 33rd question homework. Thirty-fourth question homework. Same question, no change. 35th question homework. I'm coming to that also. 36th question homework. This question also we have done somewhere. Tell me which question. Just now we did Maina Shehnash. So here it is Harry and Minnie. MTP April 21 question. Homework. 37th question. Homework. So by when can you complete all this homework? What tomorrow? Wait. We have our next class today evening. Afternoon, oh, economics class you have. Huh? Okay. So what do we do? Who is that? The evening class will cancel. Amma? Ah.
Accounts class will be done, sir, that time we'll do it. That night accounts class will do it.
My period is my period, none of your period. So in my period, I'll do my questions, not your questions. This is your question now. Homework means your owner. My work is over. Hello? Okay, I'll give you a target by tomorrow night you have to finish. So after today's evening class, you'll go home. Homework. Tomorrow morning you'll get up early. Homework. Then tomorrow morning law class, afternoon economics class, evening accounts class. Go back, homework. Finished. What? It's easy, pa. So tomorrow night is a deadline. Determination. Dedication. Sir, நீங்க கொடுக்கிற ஹோம்வொர்க்ல டெடிகேஷன் வராது, டிகாஷன் வேணா வரும். That is what Gunapati is saying. What is this? Oh, one more person is saying, sir, no dedication, no decation, depression only. Nice. Welcome to CA. Chalo people. That's all from my side for today's session. I'll see you in the next class. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you.